Okay, so we're going to go over the practice problems. We have 8 that we're going to go over. Let me know if you have any questions.
I had just sent you a message. I had just opened up the practice and I saw it was 8. Is that how many plus what 10 from the department? Is going to be
We're going to
8.
have, let me see, hang on. I don't know if I can, let me try this, see if I can open it on another screen. Let me see how many questions. You're going to have some questions that are, oh, no, it took the whole thing.
Is there a reason why this class has a department extra and the first accounting didn't?
The first accounting principles, it had them.
Yeah.
They might not have told you.
Yeah, my professor didn't tell me that.
Because your final is cumulative in the other class. And so those questions are definitely on there. You're going to have 21 questions on the exam, and then I'm going to add the 10 questions that are from the whole semester. This is the first time they're telling me to do that. So it's a little bit unusual.
I had the same thing for my marketing class.
They had the same thing happen there too?
I know that's which was unusual also. I didn't expect that for a marketing class.
Right. Now there's going to be 21 questions. So you'll have some questions that you'll have to answer that are not problem solving. There'll just be questions in regards to the information. But I am going to post up the topics of the 10 questions that are from the department. And it looks like it's stuff that we've gone over, and we'll be going over tonight for this exam. So it shouldn't be anything new, but I wanted to just kind of look at the questions that that I had asked to make sure there wasn't anything new that was going to be asked differently between our homeworks and tests. So anyway, if there is, before I put up the final study guide for those 10 questions, I'm going to just kind of review that tonight and post it up there. That way you'll have something to look at before you get on the test. All right, so the first one, I don't even know how to pronounce that corporation name. Eclis Corporation uses an activity-based costing system with 3 activity cost pools. So we have our 3 activity cost pools that are going to be listed out for us down here. And it says the company's provided the following data concerning its costs and its activity-based costing system. So it's given us wages, depreciation, utilities, and then it's telling us the percentages for each one of those. And it says how much cost in total will be allocated to the first stage allocation and the assembly cost pool. Okay, so we have assembly, setting up, and other. So it says the first stage is assembly, and it's given us a percentage of the allocation in each one of those. So in order for us to calculate this, we just need to look to see what is the cost in each one of those departments and what is the percentage. So for wages, we have 327,000. We're going to multiply that by 40%. We have depreciation of 315,000. We're going to multiply that by the 25%. And then the 167, multiply that by the 15%. So we're allocating a portion of these costs to each of these departments. Okay. And the way that we calculate that is to multiply the total cost by the allocation percentage. So here's the math on it. So once we work it out, the 327 times the 40%, we get 130,800. Depreciation is going to be 78,750. Utilities 25,050. Okay, we add them all up right here. 234,600. That is the amount of cost that will be allocated to the assembly department for these costs here. Okay. Do y'all have any questions on that one? That one's pretty simple. Clear. Oh. So just remember, pay attention to the wording here. Make sure that, you have the right stage so that you're looking at the correct percentages for the allocation and multiply it by the total. So if you wanted to, find setting up, you would use these numbers instead. They're asking us for the assembly, so that's why we're using those numbers. Okay, data concerning 3 of the activity cost pools of Salcedo, I think it is, a legal firm, have been provided below. So we have these activity cost pools: researching legal issues, meeting with clients, preparing documents. And then we have the total costs and the activity hours, and then at the bottom it has the documents. So it says the activity rate for the meeting with clients. So we're going to focus on just the meeting with clients. Let's see. I think this button's easier. Okay. So we have meeting with clients at $1,369,887. And it's activities based on hours. So our hours are 7,653. So it wants to know the activity rate. So the rate per hour meeting with the clients. How are we going to calculate that out for the cost pool? So if that's how we're calculating how to determine what the cost is based on that activity, well, then we're only going to pull those numbers. So we're going to take the 1,369,887 divided by the 7,653 to come up with 179 per meeting. So all you're trying to do is figure out, okay, what is my rate per hour based on this activity? So you want to make sure you pull the correct activity. The other numbers, you don't need those because you're not worried about those. They're not asking for those. So again, just make sure you pull in the correct information. Look to see if you have the right activity cost pool, and then based on how they're looking at the activity, and in these examples, you have 2 that are based on hours, 1 that's based on documents. And so if you're asked about meeting with clients or researching, obviously you're going to be calculating the hours to figure out that cost per hour. If it's documents, you're going to divide by the number of documents to come up with a cost pool per document. Okay, so since we calculated at 179 per meeting hour, so that's it. We're just looking for that rate. Okay, Klumper Corporation is a diversified manufacturer of industrial goods. The company's activity-based costing system contains the following 6 activity cost pools and activity rates. So they have a list of all of your activity cost pools and what the rates are. And then it says activity have been supplied for the following 2 products. So we have 2 products, not 1. And the table is going to ask us to break it down by activity. How much is it by activity? So we have to look at supporting direct labor, and then we're going to look at direct labor hours, and we're going to figure it out that way. So for K425, we have the number of units produced per year. Okay, so for the direct labor hours, we had 925 hours. And it tells us that our direct labor is $10 per labor hour. Let's see if it gives us a table down here. Yeah, this is a nice table that it breaks it out for you. So you're looking at that first activity pool. So we're looking at support direct labor. We have $10 rates. The activity is 925 hours. So to find that total cost, we're just going to multiply 10 times the 925 to come up with the 9250. Now we're going to look at the next activity, machine processing. It tells us on the chart, machine processing is $5 per machine hour. And we're going to look at the machine hours and see, okay, for K425, we had 3,400 hours. So we're going to multiply that to come up with the total cost. So 5 times 3,400 is 17,000. Then we look at machine setups. Machine setups, we've done 13 setups and it's $45 per setup. So we're just going to multiply again, 45 times 13 to get the 585. Production orders, we have 13 production orders at a cost of 160 per order. So we're going to multiply that one and come up with a total cost of 2,080. Shipments, we have 26 shipments. The given information says it's 120 per shipment. So we're going to just multiply that 120 times 26 shipments to come up with the 3,120. And then the product sustaining 800 per product. Well, we have 3 product sustaining. So we want to multiply 800 times the 3 to get 2,400. Okay, so the top chart is listing out all the activity and the rates for the first product number, K425. So all you have to do is calculate each one out individually, pop these numbers in. I don't know if it's going to give you a total or if it's going to do that automatically as you put them in. It probably is going to do it automatically because it's got a formula, it looks like, in there. So you want to plug in those numbers and then you want to do the exact same thing for M67. So here's the chart for that. So you can do this as well when you're doing the test. Just make sure you grab the right activity, hour, or setup, or whatever it is, and multiply it by the correct rate. Just make sure you pull in your right numbers. So the best thing will probably just do a chart, just line them up and multiply them out and fill in the chart. That's all I'm looking for, is to figure out what's the cost based on that activity. Okay. The BRS Corporation makes collections on sales according to the following schedule. So we have sales 30% in the month of the sale, 60% of the month in the month that is following the sale, and 10% of the second month following the sale. So we're trying to figure out what our cash is going to be based off of sales. We kind of have a trend, and so we can figure this out. So if I'm looking at my cash, they're asking me for June. Okay, so we can work backwards with this. So if I'm in the current month is June. I'm looking at sales of 150,000. And what does it tell me I'm gonna get? What percentage of those sales am I gonna collect in that current month? So 30% in the month of the sale. So for June, we had 150,000 in sales, and I expect to get 30% of that. For May, I have sales of 130,000. It's telling me that I'm going to get 60% in the month following the sale. Well, June is in the month following May. So for May, it's the next month. I'm expecting to get 60% in collections of those sales. And then April, my sales were 140,000. I'm expecting that I'm going to get 10% in the second month following the sale. So I'm expecting 10% of April sales. So we're trying to just calculate out a budget for cash. How much do we think we're going to collect in June? So in June, we're going to look at what, we have decided is a good percentage based on historical data. We're going to look at each month, break it out by those percentages to say, this is what my expectation is for cash. So all I'm going to do is multiply that 150 times 30, 130 times 60%, 140 times 10%. So here's my, let me bring it up here. Here's my table. So when I work it out, each one gives me an amount of what I think I'm going to collect, and then I'm going to add them all together. Okay, so I'm just looking at each month, multiplying it by the percent that I think I'm going to collect, and then I come up with the total for each month of what I think I'm going to collect from those sales and add them together. That's my budget for June cash collections. That's what I think I'm going to collect. So the main thing here is just to make sure that when you're looking at your month and you're looking at the way that they lay this out is to grab the right percentages and make sure you multiply by the correct month. You don't want to, you know, look at April and say, oh, 140,000, let me multiply by 30%. Make sure you read how it's broken out.
Why is it worded that it says, you know, month of sale, month following sale, and it's listed April, May, June? If June's just, why don't they just say previous month? Why they say following month? It's like something that's been predicted or something.
Well, okay, because the top information is giving it to you almost like if it's giving it to you like in the current month. Okay, so I'm in this month, I'm expecting to get 30%. In this month, I'm also expecting to collect 60% of the month following the sale. So I'm in the month following the sale. So it's just looking at it as a standpoint of like you're in that current month that you're trying to collect. And where do I have to go back to make my calculations? So just, you know that.
Just think about it backwards.
Yeah, just think about it backwards from that, you know, so you're in this month of June and I've already sold products in the past. So you're looking, you know, in the past in order to forecast what I'm going to get today.
Okay.
Because a lot of those sales, you know, they're probably net 30, but a lot of people don't pay in 30 days. So that current month, you're not going to have as much maybe in sales. You're going to have the majority of it coming in that 30 days after. So the month prior to, in May, that I'm going to be collecting the majority of the money probably in that next month. So you just want to make sure you read this correctly. On your test, it'll be laid out exactly the same way.
Yeah, I saw it laid out like that in the homework, and I was like, first I was like, this looks like, why is it like back? And then I said, it must be backwards. Some way I could figure it out.
Yeah. Yep. And so, you know, for me, it seems pretty simple, but we do a lot of forecasting and budgeting, but it's maybe not so much when you're first looking at it. So just make sure you read it very carefully and pay attention to the month that they're asking for. They're asking for June. So we want to make sure that in June, that's my current month, and then work back from that.
Kind of like how they do in car sales.
Yeah.
The previous, and then that way they forecast a sale.
Yep, they forecast how much they're going to sell. They probably forecast their collections too, based on how much they think are going to be cash sales or how much is based on them getting financing from a bank, because sometimes that takes time to get that money in. So yeah, they probably do something very similar. They're going to be getting some money from the previous month's sales in that current month, because you have to send all the documents to a loan company, and that loan company has to go through all the paperwork, make sure everything's turned in properly, everything's signed. And once they say, okay, we have everything we need, the loan set up, I'm going to go ahead and send you your money. So there's a little bit of a delay in getting your money when people finance at the car dealerships. So they're probably doing something very similar. Okay, let's look at number 5. So we have Florida Corporation, manufacturers and sells stainless steel coffee mugs. Expected mug sales in units for the next 3 months are as follows. So we have budgeted unit sales for each one of these months, October, November, and December. So Flirt likes to maintain a finished goods equal to 30% of the next month's estimated sales. How many mugs should Flirt plan on producing during the month of November? So we have a couple of things that we have to look at, because they're wanting to know what I need to budget and what do I need to produce for November. What about it? Okay. So I have, let's see, my desired month in November. I need to have, let's see, 30% of the next month. So for December is my next month. So I'm looking at December, 34,000. I want to have 30% of that in my finished goods going into December. So I need to calculate out what is that. So 34,000 times 30% is 10,200. Okay, so during November, I know that I am planning to sell 36,000 units. Now, I have to look back because remember, I'm coming into November with 30% of what I need. So I have to look at October and figure out, what was there, what was being brought in. So I'm taking that 36,000. I'm going to multiply it by the 30% because when I was in October, I produced 30% of my expected November sales, and that's what's coming into there. Okay, so I have my 36,000 that I need for my sales in November. Well, how many did I bring forward? So we can look at it that way. So it kind of breaks it down a little bit different in the solution down here, but we're going to go backwards with it. So in November, I want 36,000 units to sell. But from the previous month, I brought in 30%. Well, what's 30% of that? So this calculation's here for me already. So 30% was coming into November, 10,800. So I need to subtract that out because I know that I need to sell 36,000, but I already have 10,800 in my finished goods that I'm carrying into November because I'm preparing by saying I want 30% of next month's estimated sales. So my estimated sales, 36,000 multiplied by 30%. So I'm going to take 36,000 less the 800. So let me do, actually, I have my calculator here. So 36,000 minus 10,800. So it's 25,200. Now I also want 30% of next month because I need to have that in order to bring forward into December. So this right here, if I produce 25,200, I already have 10,800. That takes care of the 36,000 that I need for November. Now I need to take care of the next month because I have to have that 30%. And that's where this calculation comes in. The 34,000 times the 30% is my 10,200. So I'm going to add that now because I want to include that in this production because I don't have enough to cover November and December at this point. I'm only covering November. So I'm going to add the 10,200 in. So now I need to produce 35,400 mugs in November to make sure I cover November sales and I cover the 30% going into December. Does that make sense? Okay. All right, let's look at number 6. TL Corporation has a standard cost system in which it applies manufacturing overhead to products on the basis of standard machine hours. The company has provided the following data for the most recent month. Okay, so it's wanting to know what was the fixed manufacturing overhead budget variance for the month. Now it's given me a lot of information here. All it wants to know is what was the fixed manufacturing overhead budget. So I need to look for that. Okay, so right here. So here's my total. Oh, it's not rating. Total fixed manufacturing overhead, this 50,000. And then I had my budgeted fixed manufacturing overhead. So I'm only going to look at the fixed manufacturing overhead because the question is only asking me what's the variance there. So what happens is we budget what we think the cost is going to be. And then we go through the month and we have actual cost. Now that the month is over, I want to look and compare and see what is my variance. Is it favorable or is it unfavorable? Well, let's look at it. I budget for fixed overhead was 50,000. And I had my actual at 54,000. So what's the difference? The difference is 4,000. Did I go over on my actual or did I go under? If I went over, well, then it's unfavorable because I thought my costs were going to be lower. If my actual is lower than the budgeted amount, then it's a variance that's favorable because I came in under budget. So our difference is 4,000. That's our variance. We have a variance of 4,000 unfavorable because the actual is greater than the budgeted. So that would be your answer. Just don't look at all these other activities that are here because they're not asking for that. You want to know only your fixed manufacturing overhead. So that's what you're going to look at. Okay, number 7. Banda Industries, Berhad of Malaysia, manufactures sporting equipment. One of the company's products, a football helmet for the North American market, requires a special plastic. During the quarter end, June 30, the company manufactured 35,000 helmets using 22,500 kilograms of plastic. Okay. It's saying the plastic cost the company $171,000. I'm looking to see, I'm checking the numbers real quick. Okay, here we go. I was looking at my notes. According to the standard cost card, each helmet should require 0.6 kilograms of plastic at a cost of $8 per kilogram. So the first question says, what is the standard quantity of kilograms of plastic that is allowed to make 35,000 helmets? Okay, so I need to look and see how do I calculate that out. So I'm going to look at my 35,000 helmets, which is given to me right here. The company's manufacturing the 35,000 helmets. And what was my standard kilograms per helmet? I'm trying to calculate how much of that am I going to use. So right here, according to standard cost, the helmet should require 0.6 kilograms of plastic. So I'm going to take the standard plastic kilograms, and then I'm going to multiply that by 35,000 to come up with how much kilograms that I need. So the quantity of the kilograms, I'm just taking 35,000, which is the actual, times the standard, which is 0.6. So the standard quantity allowed is 21,000. Now I'll need to look at the cost, the standard cost that's allowed for the actual production. I have 21,000, which I just calculate. That's my quantity in kilograms that I'm going to use. And what is my standard cost? Now that I know how many kilograms I'm using there, I got to take my $8 per kilogram. So I'm going to take $8, multiply that by the 21,000. Okay, so I have to calculate the quantity out first. Take the number of helmets. How much plastic do you think it's going to be per helmet? It's 0.6. And that will tell me how much quantity am I using in kilograms. That costs me, in a standard cost, $8 per. So for the standard cost, I'm going to take the standard cost per, which is $8. So I calculated out 21,000 times 8 to come up with 168,000. Now I got to look to see what my materials spending variance is. So I want to look at the cost. So the cost cost me how much? Actual. It's saying that it was 171,000, right? But what did I just calculate out that the standard cost should have been based on 35,000? If I'm using the standard kilograms of plastic per helmet and I calculate that by the standard cost, I come up with 168,000. Well, I have a difference there. The actual was 171 And the standard that I should have had for the 35,000 helmets that I calculated is 168. So I need to take the difference. What's the difference between 171 and the 168? That's the $3,000. And is it higher or lower? So it was my actual, this is my actual. Was it higher than what the standard that I thought it was going to cost me? It is, it's higher, which means it's unfavorable. That's why we have an unfavorable variance of 3,000. Now we're going to look at the material price variance. So on the material price variance, let me clear this off. Okay, I'm looking at my quantity. This breaks it down where you can kind of understand it a little better. So for the materials variance, I have to look at what was the actual quantity, which they told us in the problem, the actual quantity was 22,500. And then I have to multiply it by the standard price. That was the cost that I was expecting. So I come up with $180,000. Then I got to look to see and compare that to the, let's see, I don't want to confuse you when I'm talking because it's kind of confusing here. I wrote it out on my paper to make it a little bit easier to understand. So I'm going to take my actual cost of the 171 and I need to compare that to the 180,000 that I just calculated here, which is the actual quantity of 22,500 multiplied by the standard rate of $8. So I came up with $180,000. That is what I was expecting that I would have to spend if I had 22,500 kilograms. I was expecting 180,000, but what was my actual cost? 171,000. The difference is 9,000. So that difference, the 9,000 is my materials price variance, 9,000. Because the actual cost was lower than what I'm calculating out, what I actually used multiplied by the standard rate, which is what I'm expecting, that came up to 180. So it's favorable because the actual materials variance of 9,000 is lower because my actual cost was lower. The actual cost was given to me. Okay, so now we're looking to see what was that total variance. So now I got to compare the 180,000 that I just calculated out. This is my actual times the standard. Now I'm going to go and compare it to what I was expecting. How much was I expecting on the standard quantity? Well, I was only expecting 21,000. Remember, we calculated that out already. I have 35,000 helmets at 0.6 kilograms per helmet. So I got to multiply that out. Let me go back to right here. So here's my 35 times the 0.6. That's where we came up with the 21,000. So I'm going to take that number, the 21,000, and I'm going to multiply it by the standard rate. So my standard quantity that I was expecting times the standard rate, which is what I was expecting, was 168,000. Right? But if I take the actual quantity times the standard rate, there's a variance there. 180 is what I calculated out, but on the standard quantity times the standard price, I come up with 168,000. So my difference is 12,000, and it's unfavorable because the actual quantity was more than the standard. Okay, so that's why I have an unfavorable balance, because I'm looking at variance, because I'm looking at this 180. That's my actual kilograms times the standard, and comparing it to what I was expecting my standard quantity to be times the standard rate. Okay, so the difference is the quantity here. My actual was 22,500. I was expecting 21,000, sorry. The variance, 12,000, is unfavorable. And I would just fill that into the chart right here. Okay. So you have to walk through the process, and the way that they do this is nice. You might want to set up the same thing when you work in the problem out, is do your actual quantity times your actual price, do your actual quantity times your standard price, and then do your standard quantity times your standard price, and then you can figure all that out. So you can look at the 171 and compare it to the 180, and the 180 compared to the 168. So it helps you when you're figuring out your material variance, your price, and your quantity. Okay. So if actual quantity, actual price was 171, we're taking the actual quantity times the standard price of 180. That's how we're coming up with the price variance. Because the only thing that's changing here is the standard rate versus what the actual cost was. This is my actual in kilograms, so I'm not looking at the variance right there. I'm only looking for that price. Then when I compare to look for that quantity, I'm comparing the quantity of the 22,500 kilograms versus the 21,000 kilograms, because the price is staying the same. The cost, per is staying the same. So the difference is my quantity. And that's why it's my material quantity variance. Okay, do y'all have any questions on that one? All right, number 8. Dawson Toys produces a toy called the Maze. The company has recently established a standard cost system to help control cost and establish the following standards for the Maze toy. So we have direct materials, 6 microns per toy at $1.50 per micron. Then I have direct labor, 1.3 hours per toy at $21. During July, the company produced 3,000 Maze toys. The toys production data for the month are as follows. Direct materials were 25,000 microns were purchased at a cost of $1.48 per micron. 5,000 of the microns are still in inventory at the end of the month. My direct labor, 4,000 direct labor hours were worked at a cost of $88,000. So we're going to be doing the same thing. We're going to be looking at those variances. So we want to compute the variances for July. So we're going to take the material price and quantity variances first. Okay, how do we calculate that out? We have to look to see what was the actual quantity and multiply that by the actual price. Well, it gives us that information in the problem. 25,000 was my actual at 148. So I calculate out the dollar amount and it comes to 37,000. Then I'm going to look at the actual quantity and multiply it by the standard price. So I'm looking for the price variance. So I don't want to change the quantity. I'm only going to change just the price. The standard price I was expecting was 150 per micron. So when you calculate 25,000 times the $1.50, that gives me 37,500. Well, what was the difference? My actual is lower than what I was expecting on that standard price, which means the variance is favorable because it's lower. Okay, then I need to calculate out the standard quantity allowed for output at the standard price. So I'm going to take the 18,000 was my standard. So I had 3,000 at times. So it's telling me the company produced 3,000 Maze toys. I need to take the 3,000 toys, multiply it by 6 microns. It gives me 18,000. And then I'm multiplying it by the $1.50, which was the standard price. So I'll come up with 27,000. All right. So the difference between the 37,000, let's see, where is it at? 37,000 and the 27,000. No, I don't want that. I'm sorry. I don't want to, I want the quantity. So I need to take the 20,000 microns, let's see, times the $1.50. So I get 30,000. And I'm comparing that to the 27,000 that I just calculated. So I have $3,000 difference, and it's unfavorable because my standard that I was expecting is lower. My microns, okay, so my microns of 20,000 times the $1.50 is the 30,000. That's what I'm comparing. I'm trying to see if, it doesn't give you a breakdown of that, but let me explain where the 20,000 comes from. Okay, so up here where it tells me that my direct materials were 25,000 microns, which were purchased at a cost of 148. That's how many I purchased, but that's not how many that I have in the end that I use, because 5,000 are still in the inventory pool. So I have to take the 25,000 that were purchased and I have to take out the ending inventory that are still in inventory. We haven't used them yet. So I got to deduct that. That's where the 20,000 comes from. So I have 20,000 times the $1.50, and the $1.50 comes from the price up here, which is the direct materials price, the actual price. So that's where the 20,000 comes from when you're trying to figure out your quantity variance. Okay, so we have 20,000 versus the 18,000. Okay, the $1.50 is used as my standard here and my standard here. So I'm just calculating out what is the difference in the quantity. So the difference is the 3,000, and it's unfavorable because I was expecting 18,000 versus 20. Okay, now we're going to look at the labor rate. So that was material. So for B, you want to find the labor rate variances. So we're going to look at the actual labor hours were given to us at 88,000. And then we're going to look at the actual hours at the standard rate. It tells me the hours were 4,000 direct labor hours. And what was I expecting that rate to be? $21. So I'm going to calculate that out. So I have my actual rate of 88,000. And then I'm going to calculate the 4,000 hours times $21 per hour, which is 84,000. So the actual at the standard rate is 84,000, and the actual times the actual rate, well, the actual rate was 88,000. When I take the difference, it's 4,000, but my actual is higher than what I was expecting from my standard rate. That's why it's unfavorable. Okay, then I need to look at the labor efficiency variance, which is those the hours. So I'm expecting from my standard hours to be 3,900. So I'm just taking the 1.3 hours per toy, and I'm gonna multiply that out so that I can get the 3,900 to multiply by the $21, which is my standard rate. So we take the 3,000 units that we are given here that we produced, and we're multiplying that by the 1.3, which is my standard labor hours, to give me the 3,900. So that's my 3,900. Then I multiply the 3,900 times the $21, which is my standard rate. I come up with 81,900. So I have to look to see what is the difference between the 84,000 and the 81,900. I'm using the same rate per hour, which changes the actual hours. So I calculated 1.3 times what was produced versus what did we actually do, 4,000. And what is the difference? The difference between the 84,000 and the 81,900 is 2,100, and it's unfavorable because the actual hours were more than what I was expecting on the standard hours that I was expecting per unit. So it comes to a variance unfavorable of 2,100. Okay, so now I tried to take both of them. If I wanted to know what was the total variance, it would be the 6,100 unfavorable for that, for the labor spending variance. Okay. The main thing on this one is just remember again to break down into those three pots. You want your actual, and then you're going to be looking at your actual multiplying by your standard. And then you're looking at your standard times your standard, the standard quantity times the standard price. Okay. When you do the hours, it's the same thing. Your actual hours times the standard rate, and then your standard hours times your standard rate, and how to calculate those standard hours. You're going to have to calculate that number out. It's not going to be given to you. It was told that we had 30,000 toys that we produced, and we were expecting 1.3 hours per toy. Okay, so do y'all have any questions on that one? All right, so those are the problems that you need to know for the exam. I would work those a couple of times, be comfortable with them. Those will pop up on the final. You'll also have, like I said, you'll have other questions that pertain to this information. And on the study guide that I put up tonight, it'll give you topics. It's not going to have like an actual problem to work through. I don't know if they would let me give you that, but I'm going to try to see if I have everything covered that is on there. And that way, you know, you'll know how to do it. Maybe I can give you something that'll hint to where to go to. But I know that there's going to be some questions similar to what we just went over tonight on there. And let me see, I think it was 3 of the questions are going to be on this material. Let me just check and see real quick. I'm trying to open the email so I can see the questions. I think there's 3 or 4 from this material, and then the others are coming from test 1, test 2 and test 3. You won't see the